Well, still in the world of business, it's a big day for the JSE today as low-cost retailer Boxer is listing. Our business reporter Denga Mavunga will bring us the latest during the day. But first, let's get into the latest market movements with Vincent Masoloke from Citadel. Vincent, good morning to you. Looking at the market yesterday, what are the biggest drivers of performance that we saw?
Good morning to you, Dan, and good morning to your viewers. Yesterday, the all-share index was marginally down, minus 0.35%, which is 35 basis points. The resources and the listed property indexes were the only ones that closed marginally up on the day, 0.41 basis points and 19 basis points respectively on the day. And the banking, financial and industrial indices lagged on the day. The banking index was down at 1.2%, the financial index was down 1.14%, and the industrial indices were down 15 basis points. Market participants exhibited caution due to concerns over potential trade tariffs proposed by the U.S. President-elect Donald Trump, leading to subdued trading activity on the day.
Okay, our beloved Rand is looking a bit strong at the end of yesterday's trade. What was behind that?
No, the Rand traded flat versus the dollar yesterday, but it's showing some resiliency against a generally strong dollar. Investors are anticipating domestic data releases this week, and they are eyeing the trade and budget balance numbers coming out on Friday, which could be a tailwind for the Rand. And I mean, if you look in perspective, since November 18, the Rand has been trading in an 1824-1791 range. And later in the day yesterday, it was seen trading at the top of that range at around 1821.
Now, we understand investors busy assessing the minutes from the latest U.S. Fed meeting. Any insights from them?
Well, the key takeaways from that is that, I mean, the top things to talk about is the gradual policy adjustment. The Fed Reserve officials discussed the possibility of slowing or stopping the interest rate cuts if progress on reducing inflation fades. They approved a 25 basis points cut following a larger than expected reduction in September of 50 basis points. And they also noted a lack of clarity about the so-called neutral rate. And this uncertainty is complicating the assessment of the degree of restrictiveness of the monetary policy, and in their view, made it appropriate to reduce policy restraint gradually. As well, they're looking at the inflation outlook. They remain confident that inflation will move down sustainably towards a 2% target. They, however, acknowledge that this process could take longer than previously expected. And looking at economic growth and labor markets, policymakers saw the downside risks to employment and growth as having decreased somewhat. And officials assessed that there was no sign of rapid deterioration in the job market. And the employment snapshot for October was muddied by hurricanes and a major labor strike. But the broader picture suggests that labor market is gradually cooling, though still on solid footing with low levels on unemployment and limited layoffs. And then in summary, basically, the Fed Reserve is adopting a measured approach to monetary policy, balancing the need to support economic growth while ensuring inflation continues its downward trajectory towards the 2% target.
Thank you very much, Vincent Masoloke from Citadel. Some of the insights about what's been happening in the markets.